Hi, good morning and a warm welcome. I'm Rose Jacobs reporting to you live from Sydney, and you're watching Global Markets Roundup for 𝐊𝐶𝐞 TV. Let's dive into some key highlights and happenings from Friday, starting with the US market. Big tech shares edged higher on Friday, helping the benchmark World Stock Index post a sixth consecutive closing high after a weak US jobs report. This has likely pushed back the timetable for when the Federal Reserve reduces its massive support of the economy. MSCI's All-Country World Index, which is heavily weighted to big US tech, notched a new record as Apple, Amazon, Google parent Alphabet and Facebook advanced. Benchmark US indices closed the week mixed on Friday, September 3rd, after weak jobs data raised uncertainty about the economic recovery. The tech-heavy NASDAQ composite gained as the weaker-than-expected jobs data eased fears over the federal tapering plan. The S&P 500 was down 0.03%, while the Dow Jones fell 0.21%. Meanwhile, the NASDAQ composite rose 0.21% and the small cap Russell 2000 was down 0.52%. Just as we advance with the report, stand by and we'll be back after a very short break.
Boarding pass, please. Hi, I'm Holly Shields and I'll be your host for 𝐊𝐶𝐞 TV's new show, Travel Insights. Tune in to get the latest developments in the travel and tourism space, from updates on restrictions to travel guides to info about recreation and outdoor activities, or tour guides to the financials of the sector. Though the travel industry has been hit hard from the pandemic, there is still potential left for a revival on the back of economic upturn and COVID-safe travel measures. So if you want to know where the travel and tourism space is heading, dust off your passports, pack your bags and watch Travel Insights every Monday exclusively on 𝐊𝐶𝐞 TV.
Welcome back to the Global Markets Report. I'm Rose Jacobs with 𝐊𝐶𝐞 TV. Last week, US Federal Chief Jerome Powell had reiterated that the bank would start withdrawing monetary support when the economic recovery reaches a modest pace. Jobs data released by the Labor government on Friday showed the unemployment rate fell marginally by 0.2% to 5.2% in August. Around 235,000 jobs were added in the non-farm sector, far below the 720,000 projected by analysts interviewed by the Wall Street Journal. In July, the economy had added 1.05 million jobs. Technology and basic materials stocks were the biggest gainers on S&P 500 Friday. Energy and financial stocks were the laggards. 7 of the 11 index segments stayed in the red. Stocks of ride-hailing company DiDi Global rose 2.04% after an investment proposal from Beijing's municipal government. The investment would give control of the company to the state entities. Software company MongoDB's stock gained 24.74%, trading a day after it reported strong quarterly earnings. Its gross profit was US $138 million in the second quarter of 2022. Moving to the futures and commodities market, gold futures were up 1.02% to US $1,829.95 per ounce. Silver increased by 3.70%, while copper rose 0.74%. Brent oil futures decreased by 0.70% to $72.52 per barrel, and WTI crude was down 1.13% to US $69.20. Looking to the bond market now, the 30-year Treasury bond yields was up 2.05% to 1.946, while the 10-year bond yields rose 2.45% to 1.326. US dollars futures index decreased by 0.10% to US $92.138. And now it's time for another small break, but stay tuned as I'll be back with the Asia and Australia market updates.
Property by 𝐊𝐚𝐥𝐤𝐢𝐧𝐞. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐚𝐥𝐤𝐢𝐧𝐞.
Welcome back, I'm Rose Jacobs and you're watching the Global Markets Roundup show. Taking a look now into the European stocks that slipped on Friday as US employment data pointed towards slowing growth in the world's largest economy, with retail and travel stocks exposed to American markets suffering the most. The Pan-European Stoxx 600 index slipped 0.6%, marking its worst fall in 2 weeks after data showed the US economy created the fewest jobs in 7 months in August. The London markets traded in a red zone after the release of disappointing UK services data. According to the latest data from the IHS Markit CIPS, the UK services PMI had shown a reading of 55.0 during August 2021, while it was 59.6 for the prior month. Ashmore Group shares went down by around 3.46%, even after the company reported a 13% growth in assets under management and a 28% increase in pre-tax profit during the 2021 financial year. Sage Group shares went up by around 0.08% after the company planned to begin a share buyback program of up to £300 million. Moving now to Asian markets. Japanese shares soared on Friday, with the broad Topix index hitting a more than 3-decade high after Prime Minister Yoshihide Suga offered to resign, opening the way for a fresh government that could help the ruling coalition win an upcoming election. Nikkei share average rose 2.04% to 29,128.11, its highest close since June 16, while the broader Topix vaulted as much as 1.61% to 2,015.45, reaching levels not seen since April 1991. China stocks ended lower on Friday, dented by fresh signs of economic slowdown in the world's second largest economy, though losses were capped by upbeat brokerage shares after Beijing floated plans for a new stock exchange. At the close, the Shanghai Composite Index was down 0.43% at 3,581.73 points, while China's blue chip CSI 300 index fell 0.54% to 4,843.06 points. South Korean shares ended higher on Friday as record closing highs on US major stock indexes boosted risk appetite, with investors awaiting the crucial US payrolls data due later in the day. The one and the benchmark bond yield rose. The benchmark KOSPI closed up 25.21 points, rebounding from a 0.97% loss on Thursday. And looking at the Australian market now, the Australian share market is set to open lower on Monday after S&P 500 and Dow Jones closed last week on a mixed note, pulled down by weak jobs data. However, the tech-heavy NASDAQ gained as the weaker-than-expected job data eased concerns over the US Federal Reserve's tapering plan. The Australian benchmark index finished higher for the first time in 3 consecutive sessions last Friday. The ASX 200 advanced 0.5% to 7,522.90. Investors await the Reserve Bank of Australia's next monetary policy meeting, scheduled for the 7th of September, to get an idea about the tapering of bond buying program. Meanwhile, Fortescue Metals Group Limited's share price would be under pressure as it trades ex-dividend on Monday. Gold futures were up 1.02% to US $1,829.95 per ounce. Weak economic data and eased tapering fears boosting prices of yellow metals. Australian gold miners such as De Grey Mining, Silver Lake Resources Limited and Northern Star Resources Limited might trade higher on Monday. Silver increased by 3.70% to US 24.802 per ounce, while copper rose 0.74% to US 4.3360. Brent oil futures decreased by 0.7% to US $72.52 per barrel, and WTI crude was down 1.13% to US $69.20. Oil prices fell following a weaker than expected US jobs report indicating a patchy economic recovery. It implies slower fuel demand during the ongoing coronavirus pandemic. Energy players such as Woodside Petroleum, Santos and Origin Energy could fall on Monday. Well, that's all for now with the Global Market Roundup. Keep watching 𝐾𝐿KIND TV for more market updates. I'm Rose Jacobs for 𝐾𝐿KIND.